Wendy's went through a period where, so let's back up about a year and a half ago. I was featuring Wendy's almost weekly. And that's because here, I'll go back to a 2-year chart here. You can see that Wendy's was in this pattern. First of all, we like boring stocks that are not always in the news, right? And so fast food restaurant, Wendy's, Mickey D's, Burger King, those are just staples. They're mature stocks and they really don't get a lot of headlines, right? And so we like that for selling premium in the long term. And Wendy's really did produce for us. I'm showing you a chart of Wendy's, and we like stocks that kind of get stuck going sideways, right? If they get stuck going sideways, but we know that they're a good company. They have positive earnings every time there's an earnings. They give out dividends to their investors. They're a solid company. They just don't have the pizzazz to make their stock price go up, but they make profits. They give their profits to investors in different ways than asset appreciation. These are the perfect targets for long-term premium selling. And I love long-term premium selling. And so we were trading that for a while. And then all of a sudden, Wendy's took a couple of months there where it fell out of our channel. Our automatic strategies that work with our premium selling. So when we set up premium selling trades, we always put protection in place, and we basically create a trade zone where if the underlying symbol goes out of the trade zone, a lot of times our positions either automatically or semi-automatically, require a move here or there, adjust and take advantage of that. So that happened and the trade ended for us. But now I'm kind of seeing, and when a symbol, by the way, SIP, when a symbol has been a good premium selling candidate in the past, it usually will be a good premium selling candidate in the future. And there are candidates that I've been selling premium against for the last 25 years. They'll take like 20% of their life and be honorary, right? They'll not be good candidates for selling premium, but the rest 80% of the time they're really good candidates. So even though Wendy's, we got our protective options kicked in and things like that, and the trade position ended about 5 or 6 months ago, we're back at it. I kept looking at it, and here's what I wanted to feature. Let's bring you to the present here. So Wendy's is giving me a hint that it has a new level of resistance around $20.50. And it's got a new level of support. Not new. It looks like it's been, determining this level of support for a while at $19. And so we just got a signal, and I'm going to switch my signaling software. So this is that free indicator that you talked about. And you can configure it. You can see I've got my free indicator installed on this chart 3 different times. And I basically have configured each one slightly differently depending on what the symbol is. So I'm going to turn off the one that we use in order to really analyze the S&P. And I'm going to turn on the one that I've used for getting trade signals off of Wendy's. And so you can see I got a trade signal on January 8th. Now my indicator gives end of day signals. I mean, you can configure it to do all sorts of things, but I use it for end of day signals. And then sure enough, on January 9th, we got some good follow through. So that would have been a good day for us to either buy some symbols, some Wendy's stock, or for us to buy a leveraged call option. We would want to far out in time. I'm talking January 2025, and we would want to go deep in the money. In fact, the one that I'm looking at is the Wendy's January 2025 $10 call. So that would be a good substitute option if you wanted to include a little bridge. And the good news is, and this is what I really like about our premium selling strategies, is you could totally miss a trade signal by a few days and still get in. You can see that price is still hovering around what our entry day would have been. So you can look for another opportunity to enter this. It's not like you have to be there in front of your computer right when you get the signal, like other trading strategies. You can be kind of, sloppy and lazy. And so I like Wendy's for going long right now. And like you said, this is, you put this symbol into your portfolio, and as it goes up, you just take advantage of it going up. But when it takes a break, right, and starts to work its way back down a little bit, which it could do at $20.50, it could go higher. This is the first test of that level of resistance. So it could actually go higher. We won't know if this is a good level of resistance until we get a second test. So it may go higher, it may not. But if it decides to reverse, whether it be at $20 or $21 or even $21.50, we can sell premium and take a little bit of a paycheck off of it while we're waiting for it to resume the upward movement. So there's so much flexibility to take advantage of these little pullbacks. Right now is when I want to be either buying the stock or buying that substitute option.